As you can see in the title of this video, I risked $300 to make a decent $1,500 trading profit in 1 hour using this one particular strategy. To be fully transparent with you, the amount of money you should risk in a trade should be relative to your own account size, the win rate of your strategy, and many other factors. We'll be going over that in today's video. So today's strategy lesson is divided into 4 parts. Stock selection. We'll first go through my trade planning process and how I found this trade idea during pre-market hours. Strategy criteria breakdown. Then I will explain the strategy setup, which I named the Bagholder gap up short strategy. Then we have part 3, trading execution. I'll also explain the trader psychology and the technical analysis that makes this strategy very repeatable and profitable for day trading. The next key concept I'm about to share with you is extremely crucial if you want to find success in trading and start taking every single trade seriously. And that is risk management. It's very simple but very boring, and you've probably heard of it over and over again. It's simply planning for the perfect risk-reward, but I'll show you in a live trading recording that I took today and how risk management becomes a very crucial part of this trade. And we'll be going over my executions for this Bagholder gap up short strategy in a live trading recording, showing you how I risked $300 to make $1,500 profit. That's a 1-to-5 risk to reward ratio. Let's hit the Lamborghini like button and get ready to learn. Okay, let's go over the first part, which is stock selection. How did I find this profitable stock to trade on this particular day? This ticker that you're looking at right now, SNTG, this thing actually gapped up on this particular day, 85% during pre-market hours. And this was highlighted on my customized small cap scanner. This is basically a very simple gap scanner that starts running at 4 a.m. market time every single morning, scanning for the highest gappers on the day. So a pro tip here for stock selection when it comes to trading these small cap gappers is that you want to look at the float, market cap, and the pre-market volume. This ticker SNTG fit many of the criteria we talked about just now. You can see the float is only 1.06 million shares float on the day. That means it can be very volatile and move in big ranges, either up or down. And now moving on to the volume, you can see on this column here, this is the volume today traded in shares. It traded about almost 10 million shares during pre-market hours. So you know the volume and the liquidity was going to be great for this specific ticker. And you can see that it's a micro-cap stock at only 30 million market cap. So those are the key criteria for finding profitable stocks to trade for small-cap stocks specifically. I personally use Trade Idea Scanner, but for newer traders, you can use a lot of free scanners, like the ones built into your broker platform, like DAS, Top List, or even Webull. Now let's move on to part 2, strategy criteria breakdown. So with those fundamental stats in mind that you saw in the pre-market scanner, I will then move on to researching if there's any news causing this pre-market pump for SNTG. So I did do some research on the stock on that day, and there was no real news or very positive news causing the stock to gap up over 80%. The next criteria you want to look for this specific Bagholder short strategy is that you want to see downtrending daily chart with a lot of failed breakouts. And you're looking at the daily chart for the stock right now. You can see historically speaking, the day we're trading is this one here. But historically speaking, every time this thing gaps up, breaks out, to new highs, whether it be $8 or $9 or even above, it always has trouble holding the gains. That's why you see these long wicks on the daily chart here, and here, where the stock broke out from lows all the way to highs and then closed back at $5, giving up more than 50% of the gains on the day. This kind of chart pattern is very common in small cap stocks due to a simple concept of trader psychology. Okay, I didn't name my ex-husband Mike Bagholder for no reason. It is a joke, but the bagholder concept is legit and pretty important in trading this highly profitable strategy. You can see on this chart over here, recently, only about a week ago, the stock broke out to 850s and was unable to hold its gains and closed back down at 5s. Over here again, 2 days later, it broke out, spiked to 450s and closed back red on the day at 280s. And the buyers who bought on those particular days near the highs, if they didn't get a chance to get out, that means they are stuck at those levels at the highs. And they could only watch as the stock drips lower and lower, potentially falling by 50% or more. This is commonly known as bag holding. The buyers are stuck holding the bag of unrealized losses at the highs. So guess what happens if the stock gets back to near those levels once again in the short term, like we did here on this day and this day? Well, those bag holders who are stuck higher up here, they will probably want to get out. Hence, that's what forms a strong selling pressure near those $4, $4.60s, and $8 level. And that's what's also known as resistance levels or supply zones. And all of that trader psychology concept we just talked about, that's the foundation for this bag holder gap up short strategy. Now that you understand the psychology and the strategy criteria, you're ready for the most crucial part. Part 3, which is creating a trading plan. You must have a trading plan for executing any strategy you have, and that should include these 4 things on the screen. That includes potential entry area, stop loss level, price target, and position sizing. Before I move on to guiding you step by step on how to create a proper plan, this is a reminder that if you enjoy these strategy breakdown videos, please remember to drop a like down below, and especially if you want to see more. First, let's talk about our potential entry levels. Now that you understand that these recent resistance you see on the charts here, on the daily chart, they are where the potential bag holders are. Those 450s area, $4 here, and even closer to $7 or $8, those are going to be strong resistance levels. And they are going to be our key levels for entry on the short side. You can see those levels around the 450s also line up with the pre-market highs areas. You can see this yellow highlighted part, that's the pre-market trading hours. You have the highs around 470s that day, peaking out around 450s. You drop back down and you retested that same area again and again. So that aligns with the pre-market highs. So that means for our key level entry areas, ideally we want to see the stock test that area again after the open and stay below that 450s. Next, we have the stop loss level. You must know when your thesis is no longer valid. Usually for this specific gap up short strategy setup, the risk is very defined at around the pre-market highs area, which, as you saw earlier, above the 450s entry areas, you have a peaking out around 470s and 480s. So that means your risk is going to be around 20 to 30 cents. Like we talked about earlier when we were discussing finding the entry, if the stock stays above the 450s, which is your entry area, and consolidates above that 470 and 480s, that means your thesis is no longer valid. I must stop out of the short position to avoid a much bigger loss. Okay, I know we just talked about the not so fun topic of planning for your losses, but once that's done, you can now plan for your profit targets. You must have a realistic price target to lock in your profits if the trade works according to your plan. So in this particular trade, the realistic profit-taking area will be the pre-market lows around this $4 area. And below that, you have areas around this, you can see after-hour support at 350s and potentially even lower to 320s. Those are the after-hours areas. And like if the stock really sells off, you can see some daily support at, $3, 260s, and potentially even lower. Finally, the most important part in your trading plan, which should be your calculated position sizing. The share sizes that you enter the trade with must be relative to the amounts that you're willing to lose if the price hits your stop loss around 470 or 480s. At the time of trading this ticker, I was being very conservative because there had been many small cap, low float short squeezes, causing us short sellers to lose a lot of money. So I was only willing to risk starting at $300. That means 300 divided by our predetermined risk level, risking 30 cents, I should start using only 1,000 shares. So use that same concept to calculate all of your trades. If your risk is $100, then for this trade, you would take 333 shares. If your risk is $2,000, then you can take 6,666 shares, and vice versa. So for this strategy on this ticker, I planned on starting with only 1,000 shares, and now I'll add more share sizes once the stock breaks down and confirm my thesis, showing lower lows, lower highs, and staying below the key level of 450 that we talked about earlier. Okay, so how do you like this Bagholder gap up short so far? Has it been straightforward and simple to digest? Let me know down below if you plan on practicing this setup. It's really profitable, very simple, but not easy. Also, don't forget to give this video a thumbs up, and now we're gonna dive into a live trading executions. So we're looking at the live trade from that particular day. You can see it's 9:31, market just opened. You can see I had already entered right at the open 1,000 shares short at 450's average. The reason I entered so quickly is because at the market open, you can see this thing immediately starts down ticking and there was no spike whatsoever. A lot of times the strength of a stock on the gap up is shown within the first couple of minutes on whether you can even spike or not. But no, you can see on level 2 and tape at the time, at the open, just straight up selling, not a lot of buying pressure. So that's why I started in 450s, 1,000 shares, and once that VWAP breaks down, you can see I add another 1,000 shares at 420s. So that gave me an average of 442. 2,000 shares short. Let's see if we get $4 and below. This is the first 4 minutes of the open. You can see very aggressive selling at the volume bar below. Really quickly, we're breaking down that VWAP. VWAP is still the only reliable indicator I use. I use it to gauge the strength of a stock. If you are breaking below VWAP like what the stock is doing right now and cannot even bounce to retest it, that means it's very weak. You can see we went from 450s down to $4, 4.05 in a matter of 4 minutes after open. I believe this is also going to be the area I start taking some profit. You can see I took 300 shares covered at $4, locking in $98. You can see still no green candle on the 2-minute chart down here. We're breaking down that $4. We saw $3.95 for a split second. Fast forward a little bit, you can see I added some back. So I added back the 300 shares I covered earlier because I can see that the stock still has some room to get down to. It was really weak, so I didn't think that I was going to hold that $4 level. Like we said, the price action-wise, you can see this much selling volume versus this much buying volume down at the volume bar. It just shows how weak the stock is. Every single time it tries to uptick, it's met with a lot of selling pressure. Fast forward a little bit more, you can see that $4 still not holding up. You know what? Now forming that little lower highs, we try to bounce out at 4s around like the 410s area. We try to bounce off to 410s, but now we're coming back down to that $4. It's testing that $4 support. Let's see if that holds. Oh, you can see that waterfall really quick flush down to 380s now. A lot of times with trading, once you have an entry, you just sit here and you wait. You don't really need to do too much. You don't need to add back in. You know, I did add back once, but you know, most of the time I'm just sitting here watching my position. Just let the trade work out. You can see now I switched to a 5-minute chart to confirm that we are indeed breaking down that $4. You can see on the 5-minute, we're testing that $4 again. Lower highs, lower lows. So whenever I trade, whichever strategy doesn't have to be this Bagholder gap up short. For almost all the strategies, I'll switch between 2 minutes and 5 minutes to look at the bigger time frames to see if the thesis is still aligned. So fast forward, you can see we're finally breaking down that $4 level, slowly dripping down. Like if you look at this 2-minute chart, this is slowly, you can see that buyers are slowly giving up, selling, selling, selling. When you don't have the stock bouncing, the people who bought at the highs or during the pre-market levels, they're going to want to get out. You can see at around 9:50 now, we are seeing the strongest bounce we've seen so far all morning on SNTG. We're bouncing to that 420s. Let's see if it does retest that VWAP. VWAP is this yellow line here, okay? So VWAP is at around 429 at the moment. So if the stock reclaims over VWAP, I'm gonna cover and get out. So when we first started entering the stock at 450 short, the risk is 470 and 480s. But now that we have it, working in our favor, we wanna move our risk level down. So I moved it all the way from 470s down to around VWAP area. If that reclaims, I'm gonna get out. And I think at this point, if I get out, stop out, or be a small profit. You can see I covered a little bit at VWAP just in case. So I downsized by 500 shares, locking in about like $150. You can see, fast forward, we are rejecting that VWAP again. You can see I went back in some short, still keeping a decent average at 435, 2,000 shares short. Fast forward, you can see we're testing the low of the day again. That little bounce to VWAP is just a tiny, tiny dead cat bounce. We're testing lows. I think this time around, we are going to crack that $4, finally. Again, most of this time, I'm just sitting here watching the trade workout, not really doing much. You can see we're breaking below $4. We have flushed down to 370s. 370, 360s. These are the areas we talked about earlier. Those are potential profit targets because they are like our after hour support at 360s. That's why I covered. You can see I covered 200 shares, locking in 290 now. So 360s and we have 350s. And above that, the support previously was 390 and $4 for all the potential price targets. So not bad. This all started with risking 30 cents as well. So by risking 30 cents, I've now since made almost $1 per share and even more. You can see I'm still holding on to 1,800 shares short, unrealized 1,200, locked in around 290s already. And it's only been 30 minutes after open. It's now 10:03, as you can see here. So not bad for 30 minutes of work. We're drifting lower now, 350s. I think this thing at the lows was gonna hit like 330, 320s maybe. You can see I covered a little bit more around that 350s, locked in now $500. I still have the remainder 1,500 shares short. But yeah, you can see I'm still trying to let it work. This is the 5-minute chart now. So trying to let the trade work out, see if we get 320s or lower. But if not, I'll still be covering in the money. You can see, fast forward now, around 10:20 on the clock. I'm trying to cover even more share sizes. I think like 800 shares out of 1,500. Just to lock some more in case we get like a crazy bounce out of nowhere in the middle of the day. You can see I covered some more here at 10:25. I covered 800 shares, so locking in around $1,100 and leaving the rest of 700 shares still working with unrealized 570. And I also stopped recording and just let the trade work out till the end of the day. And you can see that on the final trading view chart here, the stock, after I got out, 350s, it basically went as low as 330s and then closed out around 350s again. So in hindsight, that was a very straightforward trade, pretty profitable and not much headache. The price action was very clean and you saw the stock just kept on downtrending and slowly dripping lower. This is an example of a very clean and typical Bagholder gap up short. However, I must remind you guys the reality of day trading. There's always going to be wins and losses, but hopefully the losses are way smaller. I've shown many footages of my losing trades on this channel as well. Your setup could have a 90% win rate, and there will be the 10% scenario where the market does not go your way, even with all the trade planning and all the criteria for the strategy met. That's why risk management will still be the key to any strategy you take, whether that's on the long side or the short side. If you're looking for stock trading brokers for short selling, like this specific strategy, you can check out this video over here. I did a detailed review on a list of brokers that I recommend for beginners, long bias and short bias traders. If you enjoyed this live trading video, then make sure to drop a like down below. I have more live trading walkthroughs and strategy video breakdowns in this playlist over here.